Hello boys and girls, it's Nikos here. Hope you can all hear me and you can also see the chat. Just give me a quick yes. Just a few answers are okay. Perfect, there we go. Now before we start, I just want to know, do we have any open positions running, especially swing trade positions? I mean, some of you have the old swing trades or some hedged positions. Anything running right now you want to discuss before we go into the analysis and some other topics I want to cover? Okay, great. Perfect. Okay, let's start then. Like the Aussie Cat, Jim. Okay. And is it a swing trade? Four hourly, okay, and how's it doing? Let me just take a look. You see where they have the Aussie Cat here on this. There we go. A 4 hourly entry. So with other words, you entered on the last 4 hourly setup. That's why. So I don't know exactly. So you entered on the second candle, this one. $19th. I guess somewhere here. But I don't get the price because according to my charts you should not have any entries here except off here. You have the 2 to 3 line break here and here. Right now you should be, worst scenario, somewhere break even if you took the trade here. Okay, but whatever. Okay, you know, more or less we know the area. According to this chart, of course, if you look at it, what you have here at that point where you entered on the 4 hourly chart, you have a range on the 4 hourly chart, right? And you had previous highs and here highs in this area. So this high was not higher than that. And the entry here, even now that you're seeing the higher low, you're still in a small range that started actually down here. Okay, so you must be careful, but of course the main trend is long. You had also previous highs from October 2013 exactly in this area where you looked for longs. Okay, don't forget to check the weekly chart when you start doing the top-down approach. Yeah, like always, weekly chart, daily chart, and was more or less this area. And now the price broke the highs and it's still playing around this area. It makes sense that it's not going immediately up or down because you have major resistance there, but the main trend coming from the daily chart is very strong. It's an uptrend. Okay, the thing you have here is a lot of resistance. Yeah, a lot of spikes on the candles. You see all the up and downs on the Aussie Cat. So you must be careful, especially when the price hit previous resistance areas. These are very powerful resistance areas, previous resistance areas, because it's 1 year ago. It was last year in October, and the price moved down 600 points, and then it retraced back up and hit exactly this area. And if you use the 4 hourly chart for an entry, you would have or should have taken it according to the rules. So that would have been somewhere here. There's a spiky candle, of course, or up here a little bit late entry, but it's the only one that is clear after the break. But then of course your trouble is the previous high. So you should, if you trade an aggressive trade close to major resistance like this, you must make sure you don't risk too much. Okay, like instead of risking, let's say for a big swing trade 1% or 2%, you would start risking 0.5% or less. Okay, don't forget the top-down approach, and that you already had daily 1, 2, 3s way before you get these entries. So the trend, the change actually appeared early after the trend line break on the daily chart. That's the first big daily 1, 2, 3 you got. So your entries you are looking for after the bounce on the 36 down here and up here. It's not only late, but it's also close to resistance, right? So always make sure you're not only looking for 1, 2, 3s, because you will see 1, 2, 3s all over the place, but make sure you have done the top-down approach correctly. Okay? But other than that, well done. Now, your targets should be, of course, if the highs break. Remember, it's not only the highs you have here, you also have lows in all this area. 1 second. Starting from 2000, actually 2011, 12, right? This range you had back here on this chart. And the price, of course, created a higher low, but it reached this area of resistance and previous support. So the whole area is a weird place right now. Yeah, so less risk until it's really cleared out. Now that you're already in the trade, if it really breaks everything and it's crossing, it's staying above this resistance areas, you could of course target, I don't know what your targets are, Jim, but you could target the highs up here, and that's another like 250 pips. And then of course you can target the highs of that range, you know, the previous range. Yeah, okay. 0.6, okay, it's a good target. Okay, now that we are done here, who else has trade CHF yen? Greg? Let me see if I have the chart ready. CHF yen, okay. Which 1, 2, 3 did you take? You mean the one from last week down here? Is that the one you took? On the 13th, so probably the 1, 2, 3 here, right? The first big 1, 2, 3 after the trend line. Okay, good stuff. So should be at least about 130 pips in profit with the last remaining position, I guess. And did you also trail your stop? Okay, where's your stop right now? Below the 200 EMA. And lot 1 and 2 is out, taking profits. Did you create a win-win scenario? Can you hear me? Yeah, so if I check, let's see. Where is that? There we go. It's about like went up. I don't know where exactly you entered, here or here, whatever, depending on the broker. Also, when the candles close on the 4-hourly chart, price went up 180 pips, probably with an 80 pip stop, more or less. First and second lot out, and then this last one in. So if it's below the 200 EMA, probably the stop for the remaining position, you probably trailed it too close to break even, right? So with other words, it cannot even lose anymore, not even the last position. So you banked like about 100, I don't know, 80 and 160 and 80 pips. Okay, well done. Kathy says, I still have my bonus lot from November watching the weekly on CHF yen. Okay, there we go. Let me check the weekly November. Yeah, somewhere here. I think you took it on the, was it the daily chart? Kathy, was it the daily chart you entered, or a 4-hourly chart? Just a reminder for me. Took it on the 4-hourly, 1985. Okay, 1985. Probably somewhere here. Okay. So they went up like 800 pips, retraced. I think you hedged, right? And now it's going up again. So that again, especially for the new guys that log in, it needs a lot of discipline and patience, right? To see the trade going actually against you after seeing 800 pips profits. And Kathy had the strength to stay in by watching the weekly chart, because the weekly chart is telling her that this is a very powerful swing trade, and it's a very powerful trend. So it might retrace worst scenario down here, and if that happens, we might see a higher point at some point. Of course, it could retrace back to the support line, because that's actually the powerful support line, yeah, with the most touches, and the 36 EMA is also guiding. Yeah, but if you hedge this up, hey Kathy, did you hedge this up before you stayed in, or did you just leave it open to? Okay, you hedged it. Okay, so you took also profits on the retracement. Okay, that's good. And now that's moving up again, you're probably in only with the long, still remaining from November. Okay, you know, as I said many times, if you practice this, well done. If you practice this many times, or few times, you know, you get one really good trade, one swing trade, and you have the power or the strength to follow through with the rules. You know, when you do it once, you see how nice it is, and you want to do it all the time, right? And that's when you start looking at things really serious, but also having fun at the same time, and getting rid of all this stress that most traders experience, right? So that's what we want to do, and what you want to also to experience soon. Let me delete these lines. Perfect. So hopefully, I hope it for your trade that, well, this goes up another 1,000 pips. If not, it doesn't matter. Okay, it's already a very powerful, good trade up, and the retracements on the lower time frame and everything. We're going to cover this. So the target, what is your target actually? Do you have any? Because you see on this chart, if you don't find any, yeah, it's just the highs, right? So I would leave it and let it run as long as it can. Great, well done. So let's start now from with our classic pairs, and then we go from there. And if you have any questions in between, you let me know. What I want to cover, because I received some email, you know, that mostly I personally and most of the members focusing on swing trades, because that's just the way the big guys trade, and you want to be part of this as well. But there are also many traders that say, or send me emails and say, hey, I have much time, I just like to sit in front of the PC, and okay, I agree to turn a day trade into powerful swing trade, applying the rules and everything, but could we also cover a little bit day trading? Not a problem, you know. It's, I mean, we did that many times, but why not? It's all here, and if we practice this a little bit, it's might interesting for others as well, you know. Okay, we just use the euro US dollar. It's a good example. Even though that we are trading, that we are, let's say, focusing, or some of you are focusing on day trading, we still need to do one thing. What is that? And that is never changing. We cannot change this if we want to figure out what's the market doing actually. Exactly, right? It's the top-down approach. Now, without the top-down approach, we don't know anything. And it's not a joke. I take it really serious, this part. You have to remember always, write it down if you want to. Yeah, you could have a piece of paper, pencil always close during the live sessions. If you have some questions, let's say you have a trade running and you notice something, whatever it is, don't be afraid to ask. Write it down and make sure in the next live session you ask the question so we can discuss it. You know, sometimes there are issues that many traders, you know, experience, but they just don't take it serious enough, or they forget, or they're just too shy to ask the question because people think, oh, there are other traders here, they know how things work. If I ask the question, it looks stupid. No, don't do that, please, right? That's why we do the live session. Nobody thinks that a question you ask is stupid. Yeah, I mean, I'm talking about trading. If somebody asks about the weather, it's not that, you know, it's a different thing. But about trading, about the system, about the setup you have, don't be afraid to ask a question. That's why we do the live sessions, okay? You will be surprised how many people have the question and just don't ask. Okay, great, perfect. So weekly chart, we have to do the top-down approach. When we look at it, what do we find out? We want to see if we have a trend, first of all, or if the market is ranging. Yeah, then we want to figure out if we see some, let's say, highs or lows depending on the trend. We look for resistance and support, and we don't overanalyze it. We don't use, I don't know, indicators and RSIs and MACDs and, I don't know, Bollinger Bands and whatever. We don't need all that. Yeah, we have EMAs, and that's already enough. Yeah, all the 4 settings. And most important is just the price action in combination with your EMAs and the trend lines you draw. That's it. Okay. Now here, looking at the euro US dollar chart, what do you see? It's a downtrend. Okay, you can draw a trend line over the highs, close to the 36, which is your guide, lower highs, lower lows, and then this is changing suddenly. You have a break of the trend line, a higher high and a higher low, and then price is going up. After a while it's retracing, but it's not creating lower lows anymore. So the price in this case is stuck between the 200 EMA and the 633. So what you see in the weekly chart is a range. Yes, of course you have a higher point here, but that is a false breakout. That's what people call a false breakout. Yeah, because it did break everything, but it did not create a higher low and move up. It just moved back down exactly where it came from. Yeah, it crossed also the 633, just moved lower. And that is the first sign of a possible range, as you already know, or most of you. Yeah, so if you get something like that, you know that, okay, I didn't get, the price did not stop at the 36, so if you draw a support line, 2 touches extended, what you expect is that after the retracement, that the price actually bounces and moves up. Okay? Correct so far? But it did not happen. The price moved lower and then created a lower high. So you could say, oh great, maybe now this whole scenario is changing again. and because the price broke that line, I might get after that lower high now again a short trend. But you see the price did not create a lower low on the chart, on this weekly chart. It stopped again close to the previous lows, went back up, hit the 200 EMA, did not create any higher points. This is not higher than here, it's just a little bit higher than the previous high, but then did not stop at the 36, so no 1 2 3, came back again and hit the lows. So that's now the fourth time, and we already knew after the second time that it might be a range, okay? And when the price stopped here, there was a confirmation that it did not want to go lower. So we know that we have a range. We just don't know how long this range will be there. And if you look at previous highs, that's when we just start drawing our horizontal lines, of course. Previous touches here, previous touches down here. You ignore the spikes. We just want the most touches. And again a breakout, and you see, okay, here we have touches. We even had touches down here, of course, lower, but the bigger range was between the 200 and the 633, correct? And you have done your top-down approach. When you see these things live, it's very important that you draw your lines and identify this very, very quickly. Because if you don't identify that and you're looking for trades on the lower time frames, you usually enter always at the wrong spot, and every time you take a trade it goes against you immediately and you wonder why. Okay, so you need to do the top-down approach, and believe it or not, only I think 1 or less than 1% from the people that are actually looking at charts. I don't call them traders because I don't think everybody deserves the title. Let's say people that are trying to make money from this, they get kicked. You know, it will kick them out because they don't see what's going on, because they only look on a 5-minute, 1 minute or 15-minute chart. Okay, and you cannot identify any directions, powerful directions or bigger ranges if you only look on lower time frames. Yeah, you can use them to take trades, but you need to do the top-down approach. I just wanted to make that very, very clear, especially for the new members. Okay, now we had the range, we had the bounces, and then we got after a while, for the first time, the price created a small higher high. It's like a little bit higher than the previous high, but at least it stops now. It stopped at that point at the 36. So you got a crossover, you got a 1 2 3, the price stopped here, and that is the first okay sign. Yeah, it's not perfect because we have no confirmation and the price is still close to major resistance, but we have for the first time after that one, of course, a bounce on the 36. The price actually stops here, and if that happens on the higher time frames and the price actually moves higher, that's when we start looking for on lower time frames for entries. And if we know that we have previous highs here and we have major resistance, then of course we don't ignore it, but we would trade if it makes sense. If we have a good setup, we would just risk less because we know that major resistance is very close. Okay, and if we don't have good setups in the lower time frames, still for swing trading I'm talking, then we don't take them. You know, if there's no daily or 4-hourly setup, okay, we look for something else. Now let me switch from the weekly to the daily chart. If I go back to this area, we'll see on the daily chart after the crossover there was no setup. Yeah, the daily chart did give us only retracement to the 36 after a bigger range later on, and that's okay. Now because you had a weekly 1 2 3 and you have a bounce on support, for instance, okay, you could look for entries on the lower time frames, like for instance on the 4-hourly chart. Okay, so you still need your 1, 2, 3 and your crossover, your high high and high lows, and the only thing you got here that was a good enough retracement was the one back to the 200 EMA and back to the 36 only after another range where you actually got also a candle, a good candle. Okay, and that's what you could have done on the 4-hourly chart, for instance, or maybe even on the 1-hourly chart. Now that you have a weekly 1, 2, 3, I have to scroll back forever, I guess. There we go. These are the 4-hourly 1, 2, 3s, but on the 1-hourly chart you got a better setup. The retracement to 36 here and here. Okay, the first ones. Now, this is why you need the top-down approach, even to enter on the if you want to enter on the 4-hourly, 1-hourly, close to resistance or support in the range, identifying the range. Okay, for intraday traders, you need more filters, right? So what you need actually is, for instance, the trend direction. So you still need the top-down approach. The weekly chart only if the chart is very new and you don't know the direction. We know that we have an uptrend, and we know that we already had 1, 2, 3, 4, 1, 2, 3 setups. And the price every time when it's retracing back to the 36 on the weekly chart, we know that it's actually moving higher for now. That means an uptrend, also with big retracements, because the price usually, looking at this chart, moves up 700 pips on average and retraces 500. So it's an 80% retracement. Yeah. Okay. So after you have seen the weekly 1, 2, 3 setups, you know that, okay, if I get a weekly 1, 2, 3, wherever I get it, so let's use the last one. That means if the price is bouncing on support, in this case a powerful support line with 1, 2, 3, 4 touching the 36, that this could be very, very powerful. History shows or tells us how powerful that is. Okay, we have a lot of history here that actually shows us that the price is bouncing and moving higher. And of course, now that it's that the price has done that already 4 or 5 times, you never know when it's over. Okay, we don't know when we will see the retracements or the trend change, but that is not a big problem as long as we get big 1, 2, 3s on the weekly chart and bounces on support. We have to focus only in the direction of the trend. We have to focus on trades that move in the direction of the trend. Does everybody agree so far? Even on the lower time frames. Okay? Here we have a 2 to 3 line break. So for swing traders, again, of course you could just take the weekly chart to take the trade, no problem. But then you want to take the first setup you get after your 1, 2, 3, after a trend line change or something like that. For instance, this one, or after the range, the first one. So you don't want to wait for the 4th or 5th 1, 2, 3, right? But if it's late, like now, the price did already create 4 1, 2, 3s on the weekly chart. You can now switch to the next time frame, like the daily chart, and look for setups there. Okay, on the daily chart, the only thing you have after that weekly 1, 2, 3 is a trend line break, and only one candle retracement that came with a crossover. So here it doesn't look clean and clear. You don't have a nice clean 1, 2, 3. And if you don't have that, you can switch to the lower time frame to look for a setup there. Sorry, Dave, that's what I explained right now. Okay, just do it here. Another example, for instance. Here now you have a little bit of support. Very important that you also draw support. You have your trend, which is long. You have the daily, the weekly chart, of course, and the daily that's pointing up. You also have kind of a daily 1, 2, 3, but it's not visible on the chart. So you have, not easy at least, so you have to go to the lower time frame and look for one there, and that would be the 4-hourly chart. Here you have a 4-hourly chart, 1, 2, 3. You have a trend line break. It's a weekly 1, 2, 3. Everything is pointing in your direction. 2 to 3 line break after the 1, 2, 3. A good entry candle, a stop of about 75 pips, let's say, and that's what you got. And the price moved up about 150 pips so far. So first and second lot out if you are lucky, or close to it at least. Okay, so good stuff. And if you don't get a 4-hourly setup, or you miss it, then you can still watch for 1-hourly setup, but sometimes they don't come. Okay, sometimes you get a better 1-hourly setup after trend line break, sometimes a 4-hour, in this case a 4-hourly setup, and then you apply the rules. Okay, this is for swing trading entries. There are other ways to enter trades like these. What is the question? Which is the higher high? The higher high of what? At which? This is a trend line break, okay? If you get the trend line break, this is your trend line break. Also a daily and weekly 1, 2, 3, okay? So this is the first high you get after the trend line break. So that's the highest point, okay? And then you have the higher low. So this low is higher than the previous ones here. So you have the first 1, 2, 3. This is the higher high. Because you don't have any previous higher highs. You have a tiny one here, but that is not after the trend line break. That comes with the trend line. So it's a touch on the trend line actually, and the retracement, then it breaks out. So after the trend line break, this one, you want to look for the first 1, 2, 3. Okay, this is the first higher point, that's the higher low, and then you have a higher high here and another higher low. It's the second 1, 2, 3. Okay, you want to look for the first 1, 2, 3 after your, in this case, weekly 1, 2, 3 here, or on the daily chart after your trend line break with your 3 touches. Okay, now what about day traders? What would they do? Let's say okay, great, I have a 4-hourly 1, 2, 3 here, but I don't want to take the trade on the 4-hourly chart because I just don't want to. Yeah, I just want to be intraday trading. I want to do the top down. I have to do the top down approach, of course, but I want to make sure I stick to the rules, and that's why I do the top down approach. You look for the daily and also 4-hourly charts and 1, 2, 3s, and then I would go to you can do 2 things actually. Stuart said 1-hourly, 5-minute. Okay, you can go immediately from the 4-hourly chart to the 5-minute chart if you found yourself your 1, 2, 3 with your higher low and the bounce on the 36 here. So the price broke the 36 a little bit just to find the extension of the line that you could draw. Here down here you see all these touches. If you extend it, it ends up exactly there. You have also the 633, you have your previous resistance line, all is ending up at one point. This is very, very powerful, and then suddenly price is going up, breaking your 2 to 3 line. So when that happens, the price bounces and you see live breaking the 2 to 3 line you've drawn on your 4-hourly chart. Okay, that's when you want to switch immediately to the 5-minute chart and look for an entry there, for setup there. Now I don't know, let me just, because we have other 4-hourly setups here, let me see if we had something interesting at that point. Let me scroll back. There we go. Okay, this is your trend lines, right? You see the price squeezed between the 200 and 633. Then it's getting out, it's coming out of here. So remember, that's a 4 hourly 1 2 3. And then what happens? The price creates this 1 2 3 here. Didn't touch the 36 by a couple of pips, but then you get another chance where it's actually touching, and you get another chance where it's touching again. So here's your crossover, here's the previous low, and actually you had another 1 2 3 that came exactly with the trend line breakdown here. And if you didn't like it because you have what we call a sandwich situation, the price sitting between the 600 and 200, right? Then you just have to wait for the price to come out, break it, and then aggressively enter. Or you just wait for the next 1 2 3, and that's the one you got after that. You want to make sure you catch, especially on the 5-minute chart, the first or second setup, not the third or fourth, because it's a 5-minute chart. It could be that the price retraces too much, kicks you out, and then goes in the direction of the trend again, but without you on board. So very important you catch the first or second good setup. In this case, if I zoom out, it would look like that. Okay, so you had, where is it actually? Oops, I lost it. Let me make it bigger. Oops, I was down here, that's why. Okay, I thought I have to scroll back forever now. There we go. So you see, here we go, and then this is going up quite a bit. So what you do, you manage your first lot, okay, and second lot on the 5-minute chart. And now ideally, if it looks good and you are trading in the direction of the main trend, what else do you want to do? What do you want to do with the last lot, for instance? Yeah, you can leave it run, let it run. You can manage it on the higher time frame and treat it as a swing trade. Yeah, for instance, okay, let's imagine you enter here or here, it doesn't really matter, with a stop on average of 15 pips. It's really small, and then price is going up quickly. You make your 15 and 30 pips, and now you have a win-win situation. Okay, of course, if you want to only manage it on the 5-minute chart, then you have to trail. You draw your trend lines, make sure you have 3 touches below the 36 EMA. In this case, it's moving below the 200, and you can start trailing your stop every time you get a new touch or bounce on the 36 also. Okay, it's starting to range. You need to look for trend line breaks, and if they don't appear, you just redraw the trend lines on this 5-minute chart. But this is really not good for your eye to watch all this noise. The best thing is you trail your stop to break even, or you just leave it where it is. It doesn't really matter much, and start managing it on the 4-hourly time frame, because the 4-hourly chart was the chart that made you taking this trade in the first place. Right? The 4-hourly was your filter that said, here we have a 1 2 3, and now it looks like a long. Main trend is up. 5 minutes gave you some setups, and what would happen immediately? It would grow an account. It can grow an account quickly if you have the patience to stay in, because remember, you had a 15 pip stop. If you risk like 0.5% maximum on a trade like this, but in the end it's going up, in this case 150 pips, it's 10 times the stop for the remaining position, right? And if that continues to move up, then you can start even managing this on the daily chart, because the filter, the main filter, was the weekly chart, a bounce on support, and the price could of course create new highs, and that could mean that this day trade is in for a long time. Yeah. So firstly, managing on the 4 hourly, and if it looks great on the higher time frame, you can start managing it on the 4 hourly, like Kathy did with her trade, right? Seeing 800 pips, and now she starts she ended in the 4 hourly. Now she wants to manage it on the weekly chart. That's powerful, really, really powerful. And again, I have to tell you, only 1 or 2%, if at all, look at higher time frames and know what's really going on. So you have a really, really big advantage, okay, if you do that. Great, that was one example. We can do another one. Okay, not USD CHF, it's still ranging a little bit. For instance, look at the cable, GBP US dollar. Right now, what do we see? We start from the weekly chart, of course. This is a very, very powerful uptrend. Okay, very, very powerful. It's going up and up and up. Of course, we have major resistance. These are highs coming from 2011. This whole area, and yeah, it's a little bit funny there reacting, but it's still a very, very powerful uptrend, isn't it? Okay, very, very powerful. Now on the daily chart, you see higher highs than a range, higher highs, higher lows, and it's a little bit ranging. Price breaking the 36. Looks like it wants to make a 1, 2, 3 move lower, but it did not. It just reacted. We also had NFP, remember, non-farm payrolls. Price moved up quite a bit. Now we have a long 1 to 3 at resistance, and we have a 2 to 3 line break. So the price is still moving up. The daily candle here will be still active for about, what, 9 hours, 10, depending on the broker. Sorry. So actually, it's not closed yet. It's not confirmed, but we see volatility. We see that the price still wants to move with the main trend. On the 4 hourly chart, now that we know we had a daily 1, 2, 3, we also had a break. We have a crossover. What we don't have is a 4 hourly 1, 2, 3 yet. Now, what does the 1 hourly chart say? We had a 1 hourly 1, 2, 3. Okay, so the price broke the trend line 1, 2, 3. Stopped at the 36. It's a steep one, but it is a 1, 2, 3. Now some people would say, hey, this is not what we call a conservative setup, and that's why I don't take it on the 1 hourly chart. I just don't like the 1, 2, 3. If you're aggressive, you would probably take it. If not, you would leave it. So what else could you do? 4 hourly is not confirmed, means we don't have a 1, 2, 3 yet. Hopefully get one soon. The 1 hourly has one here, but you don't want to take it because it's too steep and you're afraid that it's might a fake, because you see the price spiking here on that resistance area. What can you do? Again, switch back to the 5-minute chart after you get your 2 to 3 line break. Look for 5-minute setup, a clean setup. See if we get one here. Okay, it's actually a good one. So what happens here? Price breaks the line. It's the 1 hourly 1, 2, 3, and then suddenly down here the little tiny ones don't count because it's difficult to spot, but you get your higher high after this range, you get your higher low, you get a 2 to 3 line break. And do you have support? Do you have 3 touches? You could connect a support like this. 1, 2, 3, yes, and then you count and say, okay, how far is this? 7 pips. What do we say? What's the minimum stop we want to use for intraday trading? Usually, yes, we want it below 0.3 on the 1, 2, 3, but we need a minimum. We need a minimum of at least 10 pips plus the spread. Okay, so in this case, we'll have an entry here and a stop off. An entry here. Why? We have the 2 to 3 line candle, but we want to see the next candle moving 1 or 2 pips higher according to the rules, then place the stop. So we'd say 10 plus spread 13, and it's actually below the 200 and 600, so a good place to put the stop and see what happens. And in this case you see the price moved up about 10 pips and we traced close to the lows here where it started, and in the end it moved up. So you got your, let's say, 15 pips stop, price moves up 15 pips, moves up about 30 pips, 2 lots out. Now this is a free trade now, okay? 15, 30 pips. Why is that a free trade? Any ideas? We have new members in the class. Can anybody say why that's a free trade now? That yeah, exactly there, right? Because the first and second lot is out. That means even if it hits your stop, you still keep some profits. Now, you don't have to trail the stop at all if you want to turn this day trade into a swing trade. You just leave it where it is. You can trail it to break even if it makes you feel better, but it usually doesn't really matter much. And then now you can start looking at your 1 hourly chart and say, okay, might retrace. We have previous highs here. Might come back at some point to the 36. As long as the price creates higher lows, it doesn't matter. Your 36 is the guide. It would not hit your stop, right? In this case, it's a powerful trade. And if that happens, great. And if we get later on even a 4 hourly 1, 2, 3, also great. Then you have another confirmation on the higher time frame. You could reinstate a position, but you just leave it. And if the price really wants to create a higher point on the chart, on the daily chart, for instance, in 2-3 days or something, then you have a 15 pip stop day trade. You create a win-win situation, and the last lot starts making 100, 200 pips, and that would really double or triple percentage in profits really, really quickly. Okay, and do we have any questions about that? And just explaining the top-down approach again with some live examples. 1, 2, 3s, 5-minute entries, entry exits, stops, targets. Did I forget anything? I think it was easy, right, to spot. Okay, so really these are live, just previous live examples, so good stuff. Dave, I thought I just explained it, right? We split a position into 3 parts because we want to take partly profits, ensure a win-win situation. And if you take out the first and second lot, with a stop of 15 pips, you have taken out 15 and 30 pips according to the rules. That means 45 pips. And if the last lot gets stopped out, then you still keep the 30 pips, right? You're just losing the 15 from the first lot. And that's a win-win situation. But you leave the third part open to turn a day trade into a powerful swing trade. Of course, it only makes sense, okay, if you have done your top-down approach and you trade after a daily or 4 hourly, 1 hourly, 1, 2, 3, because only that makes sense. Because after the 1, 2, 3, the bounce and support, you expect a really continuation of a trend, and that's why you would leave one lot open to maximize profits. And that's how Norbert and Jim and Gail and Edward and Jean and Kathy do all these trades, right? Doing the top-down approach and see if it makes sense to leave one lot open. Yeah, and you should do the same. I mean, there are many of you that do that, send over charts and emails. It's just I name the people that actually send charts over quite often, so I can remember. And I encourage you to do the same thing. Every time you trade and practice something and you're not sure, you want to share this, send it over to me, a PNG file or something with your chart on it, some comments. You know, when you create your trading journal, you find it under the modules, the trading journals and plans, and send them over and we can discuss the trades in the class. Now remember, you all are focusing on the same thing, the same system. So it's great that we are here all together and focusing on that, so we can share experience and you can therefore make much better trades and also support each other mentally a little bit, right? To make sure you have the not only the patience but also the confidence. Yeah, okay, that's not a problem, Dave. If you don't, how are you going to make it work if you don't make mistakes? You know, you have to do mistakes. It's not a bad thing. Yeah, make mistakes, make a lot of mistakes, but make sure you don't do the same mistakes all the time. After doing a mistake like 10 times, you should learn from it and then do something else, because there are many mistakes you can do. You don't want to get stuck with one mistake, right? Okay, you ended Australian dollar long. We check it. So great. Euro yen. Let's do the top-down approach here. Sorry about cable. If that's going up, it's still very long. And no, I know some of you have swing trades running here. Targets for now are the highest from 2009. Still nothing changed here. The 170 area for now, and an extension, of course, 73.74. So I'll leave it as it is, and we switch to the euro yen. Again, our weekly 1 to 3. It's not really volatile right now. This pair and other pairs start to range a little bit in this area, so we don't see the price following through as we would like to see. Yeah, it's still going up, but it's going up slowly, right? It's a higher point, now it's ranging, and we want to make sure now we stay out of any trades until the price actually creates higher points or breaks the support. Then we can start looking for shorts. Okay, make sure you don't bother right now if it's not making sense. Now if you're already long, you cannot touch it, you just wait for higher highs and higher lows on the chart here. GBP JPY is the same thing. It looked like shorts, they didn't happen, and we have the price. You see the price range of 1, 2, 3, 4, 5, 6 candles actually, daily candles, and no higher points. And if you check GBP JPY, look at this, it's ranging, right? You have your support here in this area more or less, and resistance here, and here the highest points. I'll leave it somewhere in between. Spikes, the price did not break the previous high, was a double top, came back. So if the price is not coming out of here, let me delete our previous scenarios. If that's not happening, and the setup below here, above here, we don't want to touch this for now, except of if you're already long, then you don't do anything. Same USD yen. Yeah, we wanted this. Remember, we were talking about the retracement back to support for a long time. Yeah, we said, okay, what is with this support? What is with that? So I wanted to see the price coming back to here. So because this will probably end up in a big bounce, but it didn't happen. It stopped in between, and that's always a little bit tricky. See, we got a little bit of shorts, and then only 60 pips. It came back where it started, so this is still ranging. Ideally, looking at that, it really looks like the price will end up at our support area where we expected it to go in the end. Yeah, and then we'll see. Yeah, it's in a range. It's visible on the daily. It's visible on the as John said, stuck between 2 and 633. It's our sandwich situation, right? It's stuck there, so we want to see the price getting out of here. My goal is start doing what I expected, breaking resistance and creating this long 1 2 3. So we're still waiting for that. We don't touch anything. And there we go. The Australian dollar hits the Australian dollar day, right? So here, yeah, it's also wedge. It's kind of a range in the wedge gem. You see, what we want to see is the price getting out of this range. That's what we said also last week. What we want to do is see that, or see this. Okay, Dave, that's great. You see, it's sometimes you just need to see it a little bit clear and live, and then you figure out things. Yeah, sometimes we try to figure out what's going on. It can be a little bit, you know, confusing, but then if you look at the chart and you know what to do, it makes sense immediately. Yeah? So a little bit practice you need. That's all. The USD CAD is still going up and up and up. On the 4-hour trend. Okay, it doesn't matter. You know what? Just watch it, monitor the trade, see what happens. Daily, remember our daily 1 2 3, and the price bounced on the 36 and buff, it moved up 260 pips, but now again retraced a little bit, and it took a while before it did this 4-hourly 1 2 3. Now this is a very steep, a very steep 1 2 3, right? It's going up quickly, retracing quickly, so now I'm not convinced that this will go up. It could also retrace back to here, so be careful here and see what happens later on. I'm just we don't have too much volatility right now on the other pairs, and so whatever you touch, you want to make sure it looks good. Ideally, I never like it when the price moves up and does not really retrace nicely or enough. So ideally want to see the price making a higher point on the chart, then retracing back, and if it's finding support and I have my 3 touches, and then in this area at the bounce I would like to look for new trades again. If that's not happening, then it has to break, touch the support, and because we have 1 2 3 4 5 touches, that's why this would be very, very powerful, right? Could be, and if it breaks, then we have to look for short setups for sure. Now the Dow, we don't have to watch now. I mean, it's over resistance. We have the highs here. The price already moved. So I wouldn't touch it right now. Wait for another 1 2 3. Then we talk about it soon. But GBP Canadian dollar, remember we have these powerful swing trades running. The price bounced on the 633, retraced back, but look what happened after the bounce last time. What did we say? We said it last week or 2 weeks ago, right? We said if the price is bouncing on the 36 EMA, it will probably go and find the previous high highs very quickly. And that happened, right? It went up and almost 500 pips, and it actually broke the highs. But now that is now the most important part. Is that a fake break just because of volatility? Yeah, because the price is now bounced again back down about 270 pips, and it's below the highs now. So this is the area we want to watch closely. What we want to see is the price actually, I don't know, retracing, bouncing, or breaking. But in the end, whatever happens, it has to create a higher high, and it has to create a higher low. It has to bounce ideally on the previous resistance now, then it would be support. and then something like that. That's what we need to ensure that this looks like it wants to move higher. Yeah, look, the 36 is holding forever since last year, since actually last summer. It's respecting the 36. And don't be like most traders and say, hey, it already bounced so many times, it will break now, let's go short. Because what happens, some people just think it has to go down now that it went up for so long, but you see, you never know, and it's still going up, and every time it's bouncing with the 36, we are only focusing on the main trend, which is long, and let everybody else trade against the main trend and get actually wiped out sometimes, okay, if the money management is not good. Look at the weekly chart here, you can see nobody expected this, but it happened. The price moved up 3,000 pips with no retracements. Very, very important that you do the top-down approach. Now intraday traders, again, they can look for bounces on the 4-hourly chart even after the daily 1, 2, 3, switching from there immediately to a 5-minute chart, or go to the 1-hourly chart and switch to the on the 1-hourly. You don't have a 1, 2, 3 yet, you have it only on the 4-hourly. You have a trend line break, and if you don't like the higher time frames in this case because it's out of steam or because you just don't like it, then switch to the 5-minute chart. And here again you'll see you have your support, you got a 1, 2, 3, you have a 2 to 3 line break, it's over the 633, price moved up, you have support, this is 20 pips. You could also say, okay, I have support down here, so maybe 27 pip stop, you know, plus spread to make sure it's below the support line. Price moved up already like 60 pips, so 2 lots out. Win-win scenario, you can leave the last lot open if you want to, and try to turn this also into a swing trade. Okay, so another example how to trade on the daily chart, on using the daily and 4-hourly chart for intraday setups. That's what I mean. Did everybody understand that? That's wonderful. Okay. What other pairs do we have on the watch list? Cadian for now. I don't like this one. It's too lazy. Euro CHF. It's a nightmare. This is ranging. CHF yen. Yeah, this one of course looks like the Euro yen. And again, you know, we don't have a lot of volatility. It's slowly going up, but really not that powerful as expected. So be careful. Australian dollar CHF, we had the 2 to 3 line break again. Price moved down 60 pips, then it came back, so we have a range. It's actually not going anywhere right now, it's stuck where we left it. And GBP New Zealand dollar, the same thing. We have the range, price is stuck between support and resistance, and it's that simple. If the price is not going anywhere, you cannot trade. Yeah, it's not your fault, it's nobody's fault, right? The market decided to take time out, and you don't want to wake it up in terms of, you know, by placing trades, I would say. Yeah, because it will kick you out probably if you don't do it correctly. Let the market, you know, wake up, let it do some setups, and then you switch. You do your top-down approach, you look for setups. You see, look at that. 36 pips range, or 35 pips range on the 1-hourly chart. So aggressively, the only thing you could do is actually, every time it's touching this area, aggressively go long. Every time it's touching up here, aggressively go short. You know, you figured it out after the 3rd time, somewhere here. After that, you could have tried that. But now, of course, at some point the price has to come out there. and if that happens, you want to make sure you, ideally of course, we want to see that on the daily chart to be more conservative and see if we get a real trend direction change, a trend change. But you can also look, of course, at 4-hourly setups below here or above there. And that's it on the Australian dollar, Canadian dollar, as we said. What we mentioned that before, right? Yeah, and that's about it. I would just wait, be patient. You can practice a little bit of intraday trading by waiting for 4-hourly, 1-hourly, 1 to 3s. But until tomorrow, I wouldn't touch all the other pairs. Just see and wait if we get new highs, new lows, and new setups. We need a little bit of volatility, right? I will also cover with you live tomorrow if you want to, the NFP system again. I recorded this like last week live, but what happened, unfortunately, I forgot to turn on the volume on the microphone. So we had a great session without sound and that was not good. And then we have a video I will upload under NFP, and I will also upload the NFP EA. Now ideally it would be great if you would trade NFP manually and not using the EA, but of course if you cannot do otherwise, why not? Yeah, so let's try tomorrow or on Thursday NFP, depending what happens if we have some setups tomorrow or you have questions tomorrow on other issues. We don't have to do that, then we do it on Thursday or something, but if we have time we can also do it tomorrow. Okay, who said one more stupid question? What do you mean stupid? Yeah, okay. I mean, the only stupid question would be if you ask me, for instance, what your name is, for instance, because I know it, I can read it, it says Dave. That would be a stupid question, but everything else, especially when it comes here to trading, there's nothing stupid, okay? Really just ask whatever you like. So do we have any other questions here? Minimum amount should I start with for swing trade? You mean in terms of money? Amount of you mean the account size? It depends on the lot size you want to trade, okay? I would start with $1,000, $2,000 account trading micro lots. Then you can also have multiple positions, okay? Yeah, don't worry about it, yeah? Yeah, it's enough, exactly. It's enough, and you trade micro lots and you practice, see how it goes, okay? Perfect. Yeah, I think that's all for today. It was enough info. I'm recording this, of course. Here I will upload the session later on and you can watch it, and tomorrow we continue. Okay, we go. I got emails, people were asking. We cover everything, right? We will talk again about scalping, swing trading strategies, Renko bars. We do everything. Yeah, bounce trading. It's just that we mainly want to look also focus on big swing trading setups and make sure we don't miss them. But if we are when we have times where the market is ranging and we are waiting, then we can cover all these other nice strategies. Yeah, I mean, if you want to have more pairs running, yes, I mean you have, if you have a 200 pip stop, if you daily charts, okay, yeah, theoretically you need a 4,000, ideally it would be a $10,000 account, okay, but 2,000 is enough, it would cover it, you know. You can say, okay, I put 1,000 in the account, but I treat it as it was a $5,000 or $6,000 account, something like that. Yeah. Exactly. A demo is also good. Start with 3, 4, 5,000, and then do it a month or two, or as long as, not too long, right? Because you don't want to feel too long, too comfortable. You need a little bit of pressure. You need to feel a little bit of pressure. Get sweaty 2, 3 times. It's always good, yeah, to get the feeling of real trading. Even if it's only micro lots, it's not much money. It still hurts when you do something wrong, or if it goes against you. You need to learn how to manage these emotions. Yeah, perfect. Make it 5K. Yeah, great. Why not? Yeah, perfect. Okay, then catch up with you tomorrow. Okay, thanks a lot and have a wonderful day. Micro, yes, there we go, micro lots. Okay, bye.